Qualcomm won't break up by www.options-trading-education.com. Dow Chemical and DuPont are going to merge and then split into three parts. Since the start of the 2008 financial crisis, there have been $11 trillion in mergers and takers. As it seems easier to break up than stay the course, it is a surprise to see that Qualcomm won't break up. As is usual with companies who consider accepting takeovers or mergers, the through process starts when profits fall or when a corporate raider believes that there is value to be unlocked by breaking up the company and selling the parts. The Washington Post reports that Qualcomm decides against breaking itself up. The San Diego, California chip maker says that it's completed its review of its operations and decided that it's best served by its current corporate and financial structure. Qualcomm shares are up almost 3% in morning trading on the news. Qualcomm Inc. announced the structural review in July, along with plans to slash its spending by $1.4 billion and cut its workforce by 15%. At the time, the company had been under intense pressure from JANA Partners, a major shareholder, to make changes. As part of the changes, Qualcomm immediately added 2 JANA picks to its board and said it would add a third later. Please note that as a result of the review, Qualcomm will cut its workforce by a seventh and reduce overall spending by $1.4 billion a year. But Qualcomm won't break up. Qualcomm stock traded for $35 a share in early 2010 and rose to $80 a share by mid-2014. Since that time, the stock has faltered and has been trading in the $48 to $52 range for the last month. It has been subject to $1, $2, and $3 opening gaps up and down during this time. The question for the options trader is where the stock is going next and how traders and investors will read the news that Qualcomm won't break up. Investor and antitrust concerns. The Wall Street Journal reports that part of the issue with Qualcomm is antitrust concerns, and the other has been investor unhappiness. Adding 3 not investor designated spots on its board helps the investor issue as Qualcomm decides against breakup. Qualcomm Inc. decided not to break up the company despite pressure for change from an activist investor and scrutiny of the chipmaker's business by antitrust authorities. A special committee of the board of directors had concluded what the San Diego-based company called a comprehensive review, Qualcomm said. It determined that shareholders would best be served by continuing the company's longtime structure, comprised of one unit that sells chips and another that licenses patents. The strategic benefits and synergies of our model are not replicable through alternative structures, said Steve Mollenkopf, Qualcomm's chief executive, in prepared remarks. Thus, Qualcomm will deal with any antitrust issues as they come and remain as a single company. Problems for mergers. The UK website This Is Money writes about trouble ahead for mega mergers. The current year is proving enormous for takeovers and mergers, with the proposed mega chemical deal between DuPont and Dow bringing the total up to a record $4.7 trillion, 3.1 trillion pounds. Indeed, since the great financial crisis there have now been $11 trillion, 7.3 trillion pounds, of deals. As far as the Americans are concerned, there is, however, no such thing as a done deal. Antitrust instincts remain as vibrant as ever. In the early 20th century, John D. Rockefeller's Standard Oil of New Jersey was broken up into 34 separate firms. The point is that if a company becomes too dominant in its market niche, it risks going the route of Standard Oil or AT&T and being broken up into competing segments. For more insights and useful information about options trading, visit www.options-trading-education.com.